Hello and welcome. It is the 21st day of June 2017. My name is Derek. Before we get into the more current charts, let's take a look at some historical ones. This is the last key silver bottom, a little south of 14, as it had an interesting situation where it went straight down in this loopy shape. Had the failed breakout, which usually results in a failed move to the downside, which technically, considering this was the bottom, what ended up being a failed breakdown. Price action going higher, but it's only here now at this previous level of resistance. Back in the 2008 fall, there wasn't too much of the consistent straight down. Really, the only bit might have been at the end of August. But we've seen some huge moves occur into the past. Price action now is where the red line is, where support was found. Support. Back in 2008, about a decade ago. And about down 60+% from where it was early in 1980. You get the drift? I'm talking about these prices being suppressed, and you can make a case where its actual product has lost so much value versus other asset classes that would be the case, where I believe that the opposite would be true, but at least the fact that it has not severed any product loss value within the time frame of the last 10 years and, well, since 1980 as well. Back in 2005, there once was a situation where there was a nice bullish pattern that formed, where resistance was established back to the band and it broke it, breaking past the 722 mark. Prices since then have better than doubled. Most other things have better than beaten that. Prices were extremely depressed, in my opinion, back then at 722, as they even might be more so today. Now bringing this back to a controversial time in September of 2001. And what is one to do with this continuously declining 18 average in price action at 417 per ounce? I had no idea that silver was an investment metal traded on the market at this time frame. And if you would have told me silver was $500 an ounce, I would have said, okay. And I wouldn't have thought much of it, as I wouldn't have thought much of it at 417 or even $1 maybe. But prices were so depressed back in this day. I think a lot of it was because, just like I stated, I had no idea, and pretty much the masses then didn't as well. And today, still a good percentage are unaware. Let's move on to today. And we're looking at a $16.40 price, 4 times higher than the last previous chart. And to me, inflation just over the last 10 years, money creation, that to me has got to be just in that sense alone. So I got to kind of wonder, what's cheaper, silver today or silver back then, adjusted to real inflation? And I'll just leave it at that. And before it was such a terrible downtrend, that's when you're supposed to not be buying. Buying there worked out well. Now we're in a big downtrend, as we can see in so many different points in here. Downtrend with so many of these moves. And when you're a believer, or if you think from your research and what you know that something is going to go way up in price because you've seen so many times before something goes way big and you're like, man, I wish I would have got in beforehand. Well, this is getting in beforehand, and I am extremely shocked now in 2017 that these prices have been remaining this depressed. And again, a big explosion I would consider to come into play. As we look at this on the monthly chart, there have been some big moves before. So you can say all you want about the manipulation, but on 2 different levels. it's been going up in sick moves before after major corrections, because what preceded the first one in 2004 was a situation of multiple years, a couple of decades, 25 years more around the area of down and sideways action from the 1980 high. This move still from that continuation, because it only got back what it declined from its nominal 50 point back then, but it had a short-term small, and I do mean the word small correctionary move of price from 21 down to 8. And I say small because of the big volatility moves. You can't go from like whatever X gain, like 10, 20, 40 X gains, unless you can have decent retracements along the way. And that's now that is working within cryptos. And if you're only looking for or if something just barely moves, it only doubles or triples for a big move, then that's where smaller declines come into play. That's why I like to do like logarithmic charts to show you the movements, because I could eliminate this, and this could say like 1, and this could say a million, or this could say 1, and this could say $1.10. It's all about the movements from like point A to point B and what it reflects towards its volatility. In this case, point A to point B represents a move from about 13 and change to 21, and the difference is 8, 21 and 13, so 8 into 13, that works out to about 60% volatility. Just different things to work into, but once this much bigger correction happens, of course, much bigger, this being bigger than this, and momentum starts to move forward, then watch out. Now notice last time when it got through in here, you had this level come through after a big gain, and you're going to get opportunities along the way. Now, after it established resistance here, you could almost make a case, well, this is like this, and then right now it's having some several periods in here. Oh, it had some several periods in here. It's almost like a relative comparison thing. But when it broke in here, it had a big gain. When it broke in here, it had a big gain. So I don't see anything different on a break above here. Okay, blank screen there, I'll fix that. The price of gold is the next one, and it's not doing too much. Just a couple of small sideways pause situations. It's like you're pausing a video game and you're going to move on. So let's move on. Transitioning to the gold to silver ratio, it's continuing a break of previous resistance, which was first played here, tested again here, very shy of that level in here. And now 5 consecutive green candle sessions after it had about 8 or so consecutive here, or maybe about all but one since in here, have all been green up move periods, which has shown silver to keep on, which has been underperforming the price of gold. And if this thing continues to go further, it wouldn't surprise me if the bigger moves down in silver would be the main culprit to such. Moving on to the platinum chart, which in this declining 18 average is resisting the 18 average of highs right now, barely holding amongst its support level. Is it going to make a move to its previous low? It might. If it has some momentum down towards here, don't be surprised if it continues further, but it can be a headache still, because what's a clear breakdown? For example, in here, this really support level here, this is almost a clear break. You could almost be shorting at the bottom in this spot, so you got to be careful when you play within the strategy on how you're doing it. But the momentum has clearly been making lower highs and lower lows for the most of the duration, well, since this high anyway. Moving on to palladium, and it's its own separate beast, to say the least. After breaking this resistance area, It came back to it. This matches here to here. Notice this area has came back to this point already, but back in towards this band, and it's leaving the band, breaking this point of resistance. And this thing's looking pretty good. And we shorten it out to the 4-hour time frame. We could see the nice little pattern in here. Band is flattened here. I mean, it doesn't establish too much, but the band is rising. Price action is moving to the upside, and this is coming from after this nice break just before or the end of May, going from the 750 handle up to over 9, having this extended correction or a decent enough of a correctionary move. And I've talked a lot in the cryptos, and markets just do this generally either through price or through time. And long term, you could say that this is a time correction. It had its original price drop with the sideways action, and now things are starting to roll over. We could see this volume in here. Although many times it's been comparable, it's up there with the higher volume levels, but there's quite few of these volume settings. But hey, buyers are coming into the market, and it's going higher right now, and it's early on in its breakout phase. And as this is going higher, I would rather be long on the breakout here at 900 than I would be on the first time up, because when a market is really overextended, to me, that's areas where you sell and not buy. And let's move on to the US dollar fiat index. And its status on the daily time frame is the attempt to revert trend, sideways action, now establishing a little level of resistance. Band is starting to move higher. If any further acceleration comes in, I'd be looking for resistance within the area of about 98.5 up to about 99 and 2/5, 99.40, somewhere around here, as resistance area targets. But it also means, looking at these indicators, really wouldn't be a surprise if this thing does have a little bit of a push higher, as the indicators are starting to show a little bit of a rollover move. It might do something like this, where it gets a little bit more extended before rolling over. And maybe it's something like this, which is where it is now, and just have a failed breakout. There's just so many of the if scenarios, and there's no way of me knowing, but I realize that the end result of this going higher would most likely mean silver prices going lower, which is going to force that gold to silver ratio to probably break out from its bullish pattern as well. So thank you for tuning in, and have yourself a great day.